Okay. Thanks a lot, Karina. Welcome, everybody. Welcome to my webinar. Broadcasting live from Mexico City. Today is Tuesday, April the 4th, 2017. Local time 2 a.m. 11 minutes past the hour. 7 a.m. 11 minutes past the hour GMT time. This is me. It's on my social media, Google Plus, YouTube channel. You click subscribe, and that's it. So, yeah, do you remember what we were talking about latest webinar? If you were around. Yes, we had some confirmation of what we were talking about yesterday during the next 24 hours. So that is what we're going to review. I don't know for how long this webinar will take place, since the only thing I will be talking about is dollar yen. So let's see if I manage to fulfill the 1 hour webinar, or if I stay short and maybe quit the webinar at 30 minutes. I don't think so, but you can make your own gamble on that outcome and maybe make a quick buck on the final result. So let's begin right now. Let me shrink my chart. Okay, here it is. Well, for the ones that were that assisted yesterday, that I'm not sure if Rocas, you were yesterday, Rocas, David weren't, and Wilco weren't. So just a quick review on what we saw yesterday. We were analyzing, among other stuff, the recent price action in the stock markets, in the Dow 30, in the Nasdaq 100, relating that information to some comments by Fed officials this weekend that were kind of dovish, plus the overall euro risks due to the French election and other European elections. By the way, Wilco, I wanted to ask you, in the Netherlands, you are going to have major elections, right, this year, if I'm not wrong? Because if I'm not wrong, I just got through that information, came across that information. So I believe that, as we were explaining yesterday, that even if the French elections turn to be favoring the Eurozone, we could expect maybe some kind of surprise elsewhere in Europe. And one of the things that we were analyzing that could shape, and I said that I was expecting at least a little dovish USD sentiment during this full week. And I was exactly commenting that depending on how dovish the dollar movement was or could be, and how the euro and pound moved to reflect that dollar weakness, we could more or less anticipate if the markets are really preparing for some kind of unpredicted outcome in the French elections. We're going to review the euro and we're going to review the cable, but we're going to start right away with the dollar yen. Just a quick overview. If you want to see the complete webinar, you can go to the YouTube Dukascopy YouTube channel. There, look for my yesterday's recording, and you can listen to it completely if you want. But the bottom line is that, and well, let's just keep it short there. The price action in dollar yen was pointing for the latest days. I was commenting on Friday, I believe, that I showed you some price boxes or something that were kind of preliminary. And during the weekend and after the weekend and after Fed official comments yesterday, I just showed these two little boxes. These were not as attractive as other elaborations of these price boxes. But actually, these were the synthesis. These two boxes were the synthesis of very unique price, time and price behavior in dollar yen. So I consider that there was maybe no further need to draw more boxes in this occasion. I said that both the resistance and the support were likely to expire more or less here. Also, I was commenting that according to what I was seeing, if the price has very strong chances to go to the downside. Even I was defending a fundamental bullish view for the latest, I believe, latest month. But I mean, when you're a trader, what you need to do is to adapt to what the price action is telling you. So, well, I just decided to then open my mind to maybe, well, the fundamental trend I still believe is active, but I mean, it's real, but maybe it's not active anymore. And what the market was maybe trying to do yesterday was to test to the downside the 110, to test the bulls there. Okay, since maybe we were commenting that maybe these Euro election risks could be translated in dollar yen, in dollar dovish, and Japanese yen hawkish as traditionally. I was commenting last week that that could change in this occasion because of the hawkishness of Fed, that we have pretty much in the pocket 3 more Fed rate hikes. Pretty much a no-brainer, and you really need something disastrous to happen to avoid that. Even if Donald Trump spoils it or not, or gets blocked every time he wanted to make some reforms, whatever, apparently, at least for the next 9 months, we could have still the shock waves, the last shock waves of Obama's administration. So I said yesterday that depending on how the market started reacting after these price boxes and after retesting the 110, where 2 weeks ago I was saying that even if the price continued going lower, the 110 was like the latest line in the sand to really demonstrate to the bigger players that if the real fundamental turns still to the upside and not only in a passive mode, that it's still active and not in a passive mode. From that moment on, from that moment the price retested the 110, the 110. So everything was aligning yesterday to maybe give way to that. So I want you to draw your, please to draw your attention to this. This is not new to me. If you go to some of the posts in the Traders blog, this is not new. This is something that it has been happening when I am using these price boxes that actually are super good timing tools. So at the exact very time my boxes ended, boom. It was supposed that if the market was willing to retest this, maybe to hover here, and eventually at this moment, whether it was here or here, it was like pretty much no man's land. But in the context I was explaining yesterday, that I was expecting maybe a movement to the downside, but I really didn't want to extend this resistance because I really needed to make a further analysis after this happened. I just decided to put it in this magnitude. Of course, I was following the market, and of course, that movement to the downside was active at this moment, but suddenly it just continued dropping. And I want you to check this. In the 111, the price that touched just after this sell-off with a very good volume, the market really didn't make it to to retest some sort of, not even this simple moving average. This is the 14 moving average. The price is staying equidistantly this line, this moving average, and the price. So this is telling you how weak the bulls are now. I can tell you that the real bulls are now positioned here. Of course, it's a no-brainer, it's the 110. And what happens here after maybe some days will tell us if we are actually still looking for some kind of recovery to the 113, or that maybe we just continue seeing this moving down, maybe because the markets simply decided to play it safe, and even we have almost a certain fact that we will continue having Fed rate hikes. Maybe they will just continue playing it safe the same way they learned to do it, and it is selling dollar and buying yen. Okay, so well, this is important because when you use this kind of tools that I showed you, that I shared with you in the webinar, it gives a complete different meaning, because all the price action here inside this potential resistance and support has a complete different meaning than at the moment they end. Because here you can have, for example, oversold conditions, and instead of meaning a selling signal, that would mean a buying opportunity, because you are hitting a support. In the same way, if you are here and you're having overbought conditions, instead of that confirming a bullish signal, that is telling you to short. But once you get here, and of course adding that thing that I was saying, that I was going to continue surveilling the market, and at this moment the resistance was still active. Of course, this is the way I showed this to you yesterday. Okay. So and afterwards this channel down line appeared. So what else you could want? You have this, and then you have this precise, and I didn't redrew these boxes here, but just look the precision. Okay, here just where the line started, touch this apex, is just this zone of the rectangle. So when you have this confirming extending, and then you have this sudden resistance line touching this, well, you have pretty much okay, yes, this could have gone to the upside for some reason, but of course it would have faced a lot of resistance. So the market just decided to go in the least resistant path. It's like water. It will look for the weakest side to move. So immediately, and I want to stress this, immediately here, I mean, if this had happened here, it would have happened just at the border, but it was just here. And from that moment on, the market continued selling off. So this is the power of these price boxes, and that is why the last week that I was saying that my price boxes were preliminary, it's because I really want to share these boxes that could actually help traders to, in some way. And that is why I take a lot of time to really confirm those boxes. And even if you see this, you could say, okay, but these are only two boxes that I could have drawn them. You could think maybe, and yes, you could have drawn them. That is obvious. It's a no-brainer. But the thing is that when you have these kind of things happening just afterwards, is when you said, okay, you would have exactly drawn this and exactly drawn this, or maybe a little bit further here or a little bit further here. I really try to make a precision analysis here, because this is what I use among other things in my live trading. So well, this is only to tell you that this is why even when I share, you don't need to use 7s, 8s price boxes to make them meaningful. The thing is that you need to really cherry pick the important ones. And in this case, yeah, it was a complex analysis when I drew these boxes, and they were summarized into single ones, and they worked pretty well. I mean, the market didn't even touch. It was shy to test this resistance and to test this support. The market respected all this, maybe because it was Monday, but even if it was Monday, the market decided when it saw this cliff that if I, for example, if I had updated that post, this is more or less how it would have looked like. More or less here. When I saw that this was going to end and that the resistance and the price action was telling me that it was wanting to go to the downside, of course I had at that moment the confirmation that this could be extended again. So well, it makes much more sense when you looked at this the way. Of course, I didn't draw it in this manner in the first place, this price box, because I didn't have enough information. It was just at maybe the ending of this. In the blog post, that, by the way, I didn't take a screenshot. Let me just take it. I was just explaining that some hours ago. Okay, give me a second. I was explaining that before Asian session. Here it is. So, well, you can see it was posted at 10 p.m. GMT time, and at this time, well, I just I didn't put this. I just forgot to change that. But okay, the analysis was a unique price time circumstance that derived these simple two price boxes apparently developing to the downside just after the support price box expired, what I was explaining here. The risks are apparently now a correction to the 110 to test bulls at the psychological level. Beware of swings to the upside because as seen in the picture we are in no man's land at the moment. Okay, so well, this is the blog post, and the swings I was at least, and I need to be honest with you, I was expecting some kind of retracement. Maybe, I don't know, maybe here try to retest this, and maybe a wild swing if you wish, short-lived one, and maybe the sell-off to continue. But apparently there are no buyers to defend. There were no buyers to defend the 111. So well, now the market is looking healthier. We are at the 110.57, but again, we're still below this moving average. So yeah, in any case that we retest this, of course, this will be at more or less the 110.70. So it would be well below the 111. Okay, so now in any case this retraces here, the 111 should work as a resistance, not as a support. Okay, so well, this is in regards of yesterday's price box analysis. What is my objective? The one that I just posted in the trader's blog, the 110. This has potential to go even to the 109, and as you can see, this channel down super high quality 82% for 1 hour and also 4-hour chart, because this pattern shows up in the 4-hour. It could be even here, so it could be even lower than 109. Of course, I'm not going to play that extensive. I would play this more conservative, and just to see the price reaction on 110, that is this low. more or less this low. So it's a no-brainer. This is like the psychological, an actual price action support. So okay, this is like the place to take your profits, or at least half of them. And maybe if you have some remaining lots, maybe put them at break even and let them run in any case this continues going lower. Technically, this has potential to go to this zone, but I see it difficult. Because let's remember that still, and the fundamental trend is active still. It hasn't changed. So at some moment you could expect to see some kind of demand. Maybe if it is short-lived, you could see demand at 110 just to retest 111 and maybe continue selling off. Yes, you could face that. But at least at some moment you can expect some sort of demand. And that should happen at 110 because of all the things that I just explained. Here it says, so we have some comments. Oh, okay. Wilco is saying that Rocaslu is 61, I believe, in competition. In the strategy contest, Wilco is showing off that he's in 52nd place. Okay, good for you both. I'm not going to play the strategy contest this time. I will solely focus on the trader contest to simply recover the losses of the latest two contests. So I would just focus on the trader contest. So well, this is in regards of yesterday's price box. So I want to show you the most recent one. Wait a second. This is, let me use the 1 hour. This is what I expect the market to behave. If you remember, the latest thing I drew here was a resistance extending here after this support expired. Now this support is showing up again in the way I'm reading and understanding the price action as a resistance. And you can see it goes from here to here, so anything here, I should expect that if the market wants to go higher, it should be stopped firstly by this moving average and then by all this zone. During the next maybe one day and a half, in my opinion, it would be hard to see the market to break at least rapidly. If in any case we see this price being broken, it should take some time. Maybe the market would go like in here, retest here, try to make a breakout here, maybe to come back again or something like that. Okay, remember that the longer the time it takes for the market to get above this, the closer it will face this resistance. So we have all the probabilities against the bulls. That is something that you need to keep an eye on. Even if the market makes it here, it will face now this. And if you wish, you could even overextend this even further, and you can, I wouldn't do that, but you can even read it that way. And then you could be facing not only this, but this resistance. Okay, so what I expect dollar yen to do in the next days, what I believe that is, it will continue moving more or less in the same speed to the downside. That is what I believe. To more or less hit the bottomest part of the movement at this exact moment. Of course, this could vary, and it's not really important. But this is how I express my opinion on the market using these boxes. If I expect expect this to continue, it will just hit here at the bottom, where just below the 110. So I believe that a market should here do some sort of what I was just explaining, to expect some kind of support. So if the market really makes it here to stay more or less here and gets inside this box, this is support box. And as you can see here, this ends. So then we could have here, if the price stays here or even higher, we could expect then a retest to the upside with an open ceiling. But as again, this is going against the bullish sentiment. This trend line that is in the 4-hour chart also is so important that no matter what scenario at least in my opinion, what scenario I could be considering for opportunities to buy, at least in the very short term, maybe in this week, this line should rule a lot of the difficulties for the bulls to break above. For the bulls, maybe the expected scenario would be the price just to hover here, some kind here, and maybe try to retest here and stay here for the rest of the week. That is what I expect. In any case, the market accelerates the movement below, and more or less at this time is here, more or less 109.50. What I would fear is that this will then move to the 109, using this as resistance if it retraces at all. So this is the importance of this price and time. That in order to avoid the 109 to be retested or even lower, because you can see that this goes even lower, the price needs to figure out a way to stay here during all this time, or to go lower. The best bet for the bulls is to allow the market to get to the psychological 110 to generate demand here, and then let it alone, start buying here, 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 and to allow it to get inside this box. Because after generating buying interest here and being able to keep it until this time, then here it will be hell easier to sustain the price up, more or less at the 110, avoiding to touch the 109. That is the best bet for the bulls. If they lose this bet, and this actually at this time is lower, it's I wouldn't be surprised to see the bulls simply selling off at this moment. Just simply saying, you know what, this will continue to the 109 or even the 108.50. Okay, so this is more or less how I expect to play this movement. I'm not really expecting something new on Friday in the non-farm payroll number. What I expect is a positive surprise for the American economy. So that is what I believe, that the market will stop here, the dollar-yen, and maybe wait for the non-farm payroll number in some zone here to accumulate exactly momentum that if we have confirmation of a surprise positive non-farm payroll number, that would give the market the steam to break this line, but not before. If you don't wait for such surprising good data by the United States, this trend line shouldn't be broken at the first opportunity. This would take more time, so maybe even next week. So this is what I believe that the big guys are planning for non-farm payroll number, to stabilize the price here, and at the, depending on the non-farm payroll number that I expect to be higher than expected, and I believe that a lot of people are expecting that because that's been the pattern lately, to accumulate here long positions, and at that moment just let the market do its thing, maybe to go to the 112, and well, all the big guys that could have started already buying here or even lower would profit easily. If in any case the non-farm payroll number is, I would tell you that even if it's As expected, that would be read as a negative number. You really need to be above expectations on kind of well above expectations to make this scenario to play this scenario. If we have as expected or even lower, what I believe is that no matter where dollar yen is standing, if it's standing here or here, it's a sell. Okay, so this is, I believe that the markets are positioning themselves ahead of this news because it is important. If we lost dollar momentum for circumstantial stuff, this is the way to refrain and regain confidence and momentum. And this news would go aligned with the fundamental long-term bullish dollar yen trend. If we have a bad number, that wouldn't change that long-term fundamental trend, but of course that would simply open a path to lower levels. Okay, remember that big guys, they are not in a rush of opening and closing trades before weekend or whatever. They can hold negative positions for years because they are accumulating, they are not speculating. Okay, so let's see how this plays. As you can see, we have, instead of having several price boxes, you could expect that maybe if you have only two, maybe the potential playouts would be scarce. But that is not the case because it's the context. Actually, you can have 10 price boxes, but the circumstances and the context is so tight that maybe the market would simply ignore all the boxes and move in a range, for example, if the context indicates so. But even if you have two boxes in the context, it's what it enriches the kind of plays and movements and scenarios that we can face. Okay, so again, these two boxes, these humble two boxes, because they are standing in a psychological just below this very high quality descending trend line that is getting, the more time it passes, the more it will get closer to the 111. But we can assume that this trend line is above the 111, so it would help people shorting at 111 and 111, even if the price gets here, because this would work as a rebound zone to the downside. So this is what enriches this. And again, reading the context, you can see that the price, even if it gets in the zone that could be like kind of difficult to break, if we didn't have, for example, the non-farm payroll number this Friday, maybe the market, if it manages to get inside this, maybe it would make this for the rest of the week. But then we have non-farm payroll number. But even if the price gets here, the only thing that could make it break this line is a positive non-farm payroll number. So anything could happen. If something is more probable to happen, is not then to expect a movement to the upside, but to the downside. So I believe that would help a lot of people just to start shorting here or here or here, because maybe they are gauging the probabilities of having all these things aligned. Besides, we need to see that we have now confrontations due to how you call it, Gibraltar, between the UK and Spain. So we're having problems beyond only Brexit potential. Brexit, we just had yesterday a terrible terrorist attack in Russia, and we have a very scared North Korean leader and a very aggressive speech from Donald Trump. So all those things could not help, would not help to have maybe at this moment for the rest of this week positive expectations for dollar yen. Okay. So let me see. Let me just have a quick review on euro dollar and cable. Well, good news. I was just have a screenshot. This 4-hour chart. I was saying that depending on how the market reacted on this dollar weakness, the euro, how it reacted could tell us if the markets are anticipating something out of the box in French elections, and that is exactly what is happening. Instead of seeing a bullish movement in, this is a 4-hour chart by the way, euro dollar channel up 30%. Instead of seeing the opposite movement of the dollar and bullish euro and bearish dollar, as we're seeing a dollar yen, bearish dollar and bullish yen, we're seeing this very weak. Look at this moving average. So yes, this is related to what I was saying yesterday. I believe that this is poised to the downside. So the markets are maybe trying to make this get to the parity. Of course, if we have a anti-EU result in France, this would get into parity in a snap. But even though we had a good EU result in France, due to the rest of Europe's election this year, I believe that the markets are just wanting to reset things in the parity, and I believe that this is what is just what we're just going about to see. Okay, let's check how the cable is doing. It looks well healthier. Okay, this is again the 4-hour chart. It looks healthier. Of course, we had a good movement to the upside. While it's the same scale. No, yes. Okay, here more or less in parallel. We had a bullish movement here. Well, we had bullish movement here. Then we had this sell-off in euro. And then we had this sell-off, but stabilizing here and making this kind of bottom. I was explaining yesterday that I believe that even if I am holding a very long-term cable bullish view, of course, circumstantially, having an anti-EU result in France or elsewhere in an important country in Europe would simply hurt the pound, because it makes sense. We still are 2 years from formal divorce, so things are going to be just exactly the same during next 2 years. So whatever bad happens and hits to Europe will hit directly to the UK. Yeah, and even if they were completely separated now, they are closely related. So if one does bad, the other will be most likely not doing very well. So the only thing that maybe could make me believe that this support will work as support is the pound behavior. I would have expected maybe to see the pound at least below this line, maybe to have the confirmation that the pound and euro are heading south, because the markets are planning to sell pound and euro and buy dollars. In the other hand, selling dollars and buying yen to cover even better the risks. Okay, but apparently, well, the pound is giving us some sort of, and I don't know why my computer is overloading just at this moment, so I will just shrink all those pictures. So I don't know I will just close manually. Let me close all the Google stuff, and I just hope that this won't crash the latest 9 minutes. No, okay, I just solved it. Okay, here, okay. We didn't lose the sound and all that. And well, this is what I believe. As you can see, and if you put all this in context, all this overall risk, it makes sense that the market could, in dollar yen, continue going lower. Let me put back that that picture. This is here it is. That is why all this makes sense. That is why I am leaving this open cliff up to here, because I do believe that it has chances to go here or even lower because of that context. I put this box here because pound is telling us that maybe the markets are not that panicked yet, and then that would be reflected in this case dollar yen stabilizing some sort here. And well, what it makes after this, it depends on the non-farm payroll number. If it's not good, okay, this will continue to the downside, and the most likely thing is that you will see a retest of the 109. So I believe it's going to be everything for today, guys and girls. It was a very brief one. Let me see if I see something interesting just quickly in the charts. Dollar yen, it's now at 110.50. So it's like 20 pips from the simple 14 period moving average. So yeah, it's looking heavy. This is not precisely, and I'm going to tell you why. In the trader contest competition, that by the way, and I don't know why this is overloading again. Please let me close this just to see if I can avoid the computer to crash. I don't know what process is making this mess. Okay, so just to close this, I just forgot what I was going to talk about. This latest point. Well, I believe it's just time to leave it here. My computer is just about to crash, so it would take me 10 minutes just to log back. So let's just close it already. I would, just after the webinar, I will post the levels in the traders blog. I just remember, I am only making taking the contest, traders blog and social contest, and I will focus on both. And I won't be showing the results until I see something, at least I recover the 2 accounts that I lost, meaning maybe when I have $100 in profit, I will be mentioning the exact rates. But just to let you know, I took a short trade in dollar yen using these boxes. When the market hit the 111, the 111, yes, I was watching the price action in shorter time frames. And I usually don't do this. That when you hit a support, a psychological support to sell, but I was watching it closely, and I didn't see really serious attempts to make it go higher. So at the very test of the 111, I put a limit order to short dollar yen at 111. I just put the trade, it was almost immediately open, and I just left the computer. The market didn't have, I believe that I just had a drawdown of 3 pips, and that's it. From that moment on, the market started moving lower. So when you do that stuff using this information, first you confirm that there is a heavy selling interest, and that maybe the only thing that could, if the 111 was not good enough to stop it, maybe it's the 110, maybe. So yeah, this is, and well, this is about the trader contest account. And just when I get something important to update in that matter, I will do it. But again, this information that you see here, I use it both for my contest accounts here and my lab trades. So yeah, this is something very, let's say, important to me. I am seeing in my, room now, such a tiny little spider in the wall. It shouldn't measure more than 3 millimeters. It looks funny. Okay. So I believe it's time to call it a webinar, guys and girls. I would like to thank Wilco for being around, Rocas, of course, for being around, all the guests, Katerina for hosting and recording, as always. I would like to extend you an invitation to subscribe to my social media. This is my YouTube channel. Again, you go to the YouTube search box and then you type this iiivb Stream Room channel. This shows up. You click subscribe. If you have Google Plus account, you can look me as iiivb Stream Room, or just look me in Google Plus iiivb Stream Room, and you can bookmark that page, so you will receive the important updates that I put in my Google Plus. My Instagram and Twitter accounts, I will open them sometime in the next days, weeks. But in the meanwhile, this is the way we will stay connected. So, I don't know if Karen is around. But well, guys and girls, thanks a lot for being around. Remember that I expect you tomorrow at the same time, same place. Remember to trade safe, be safe. I'm Alberto Alvarado, and bye-bye.